Warren Buffett's opinions about financial investments are top-rated, and this is particularly true when it comes to dividend stocks.
Well, the answer is I do believe in dividends in a great many situations, including many of the ones companies in which we own stock. The test about whether to pay dividends is whether you can continue to create more than $1 of value for every dollar you retain.
His influence in the financial world is akin to the impact of E.F. Hutton's words in the past, and we'll highlight some of the top stocks from his Berkshire Hathaway's portfolio that offer some of the highest dividend yields in the market. These stocks have the potential to generate significant monthly income, ranging from $2,000 to $50,000 in the long run. There's something about Warren Buffett's investment approach that before you consider investing using his high-end portfolio, you have to pay attention to. Let's call them the 4 easy steps. Firstly, Warren Buffett believes in gradual wealth growth over time. Secondly, understanding what you invest in is crucial. If you don't get it, don't invest. Buffett sticks to what he knows, steering clear of unfamiliar territory like tech companies. I'll let you in on the other 2 at the end of this video, so be sure to stick around. And to begin listing these, it's only fair to mention how Buffett's Coca-Cola effect became the most famous in investment circles. Coca-Cola. Coca-Cola has been a staple in Warren Buffett's portfolio for over 3 decades, with its stock soaring over 2,000% during that time. In 1989, Buffett purchased approximately 23.35 million shares of Coca-Cola for $1.8 billion, making up over 20% of Berkshire Hathaway's net assets at the time. Despite Coca-Cola's current dividend yield of 3.25%, Buffett receives an annual dividend of $736 million on his initial investment, resulting in a remarkable 40.8% return. Do you need any other signs to invest in Coca-Cola? Okay, check this out. If you invested $10,000 in Coca-Cola and let your investment grow for 10 years with dividends reinvested, based on the current dividend yield of 3.25% and assuming consistent growth, your investment will be worth around $14,320 at the end of the period. That's aside your dividend reinvestment and increase in dividend yield. Capital One. Warren Buffett holds a stake worth $1.64 billion in Capital One Financial Corp., which has been making headlines with its acquisition of Discover Financial for $35.3 billion. Capital One Financial Corporation, COF, currently offers a dividend yield of 1.72%, meaning investors receive $1.72 in dividends for every $100 invested in the company's stock annually, and $2.40 per share, representing the total dividends paid out to shareholders over a year. The company's payout ratio is 23.72%, indicating that 23.72% of its earnings are distributed as dividends. A low payout ratio suggests financial strength and potential for investment in growth opportunities, while a high ratio may signal that most earnings are returned to shareholders. Capital One Financial Corporation is a long-term holding in Buffett's portfolio and has performed well. The company has a diversified deposit base with about 80% FDIC insured, which is above the industry average. It stands out as the only major bank that operates entirely in the cloud, allowing for better underwriting and quick adaptation to changing environments. This technological advantage also helps reduce operating costs and fraud while enabling reinvestment in marketing and brand-building efforts such as the Venture X card. American Express. Next on the list is American Express Company, represented by the ticker symbol AXP. American Express, a financial giant established in 1850, not only dominates the global market in payment cards and travel services, but also boasts an impressive dividend track record spanning over 40 years. Warren Buffett's Berkshire Hathaway holds 7.6% of American Express stock, highlighting his confidence in its financial strength and growth prospects. With solid financials, a significant market share, and a global presence serving millions, American Express reported revenue of $52.8 billion and net income of $7.4 billion last year. This stock stands out for its attractive dividends and potential for capital appreciation. Currently, it offers a dividend yield of 1.59%, with a dividend of $1.8 billion. With an impressive compound annual growth rate of 10.44%, it's a strong contender for a long-term investment. Let's say Warren invests $10,000 and opts for a long position with dividend reinvestment. In 10 years, his investment could grow to $28,277, paying an annual dividend of $2,793. Over 20 years, the same investment could reach $78,555 with an annual dividend of $7,693, equivalent of $641 per month. Mastercard. People like Mastercard because it's in a growing industry. Many folks use electronic payments instead of cash, and Mastercard is a top player in this. They're likely to keep growing, which could mean more money and higher dividends. Financially, Mastercard seems solid. They owe less money compared to what they own, which is good for keeping up dividends. Plus, they've started dealing with cryptocurrency, which might bring in more customers. Mastercard has been around for more than 50 years, connecting people, businesses, and governments in over 210 countries. They've been paying dividends since 2010 and have been increasing them regularly. Currently, their dividend yield is about 0.65%, which isn't super high, but still good. Over the past 10 years, their dividends have grown at a rate of 28.44%. Anyone who currently invests $10,000 and reinvests dividends over 10 years, his investment could be worth $156,027, paying an annual dividend of $37,483 or $3,123 per month. In 20 years, the same investment could grow to $2.4 million with an annual dividend of $584,838 or $48,736 per month. Moody. Moody's Corporation, traded under the ticker symbol MCO, provides investors with a current dividend yield of 0.98% and boasts an impressive compound annual growth rate of 14.03%. For example, if you invest $10,000 with dividend reinvestment, in 10 years, your initial investment could grow to $39,707, paying an annual dividend of $5,115. After 20 years, the same investment could reach $157,668 with an annual dividend of $20,309 or $1,692 per month. As a global leader in credit ratings, research, and analytics services, Moody's Corporation plays a vital role in the financial markets. Warren Buffett's Berkshire Hathaway recognizes its significance, holding a substantial stake in the company. Moody's robust financials underscore its appeal as a long-term dividend stock. If you still need a good sign, the company maintains a solid balance sheet with healthy cash flows that support its dividend payments. Not to mention, Moody's has consistently paid dividends for 22 years and increased dividends for 13 consecutive years, showcasing its commitment to returning value to its shareholders. HP. HP Inc., recognized by the ticker symbol HPQ, is a significant contributor in the computer and printer sector. Presently, it provides a dividend yield of approximately 4.08%. Over recent years, HP Inc. has consistently raised its dividends by roughly 12% annually, indicating commendable growth. This trend persists over a 5-year period with a solid growth rate of 13.51% per year. For investors with a long-term perspective spanning 10 years, HP Inc. has shown a compounded dividend growth rate of about 15.5%, further solidifying its appeal as a dividend stock. For a company that consistently boosted its dividends, boasting an annual growth rate of around 16% in recent years, this growth remains robust at 12.9% over 5 years and approximately 15.35% over a decade. As a global entity, HP Inc. generates about 2/3 of its sales internationally. Crucially, the stock has been paying dividends since 1985 on a quarterly basis. From a profitability standpoint, the company scores 8 out of 10, maintaining positive profits for a decade. Visa. Visa Inc., denoted by the ticker symbol V, is a major player in the payments processing sector, facilitating electronic transactions such as credit and debit card payments, which have largely replaced cash transactions. This industry is experiencing significant growth, with forecasts suggesting it could generate over $3 trillion in revenue in the near future. Despite its modest current dividend yield of around 0.7%, attributable to its substantial stock price appreciation, Visa's stock has demonstrated remarkable performance. For instance, an investment of $1,000 in Visa a decade ago would now be valued at approximately $5,500 with dividends reinvested. Moreover, Visa boasts an impressive 10-year dividend growth rate of 18.49%, indicating promising prospects for continued growth. Stock prices rose 29% in 2022, yet remain reasonable compared to peers. Bank of America. Bank of America Corporation, identified by the ticker symbol BAC, is a dividend powerhouse with a current dividend yield of approximately 3.53%. It has an impressive compound annual growth rate of 36.53%, making it an attractive option for investors looking for both income and growth. Bank of America, founded in 1904, is a major player in the U.S. financial sector, offering a wide range of banking and investment services. With total revenue of $115 billion and a net income of $26 billion in 2022, it's financially robust. The company's future looks bright thanks to its large customer base and focus on digital banking. Bank of America has a long history of paying dividends, nearly 5 decades, and has increased them for 13 consecutive years. This stability and growth make it a favorite in Warren Buffett's portfolio. So, how much can it pay in dividends? If you invest $10,000 in Bank of America and let it grow with dividend reinvestment and capital appreciation, in 10 years, your investment will be worth $225,051, paying an annual dividend of $60,215. That's $5,018 per month. In 20 years, the same investment will grow to $5,064,794 with an annual dividend of $1,355,137, or $112,928 per month, assuming the 10-year compound annual growth rate, CAGR, of 36.53%. These are a handful of the best high-yielding dividend stocks Warren has tested and trusted over the years. So if you're certain to make your next investment move, remember Warren's investment rules. Back to the third on the list. Warren loves a good deal, and he always opts to buy stocks when they're discounted. Lastly, Buffett often goes against the crowd, buying when others sell and selling when others buy. It may seem counterintuitive, but it can lead to long-term gains. In this video, we highlighted 8 dividend stocks from Warren Buffett's portfolio, perfect for long-term investors. However, if you're looking to balance short-term gains with long-term stability, you have options. Whether you choose all 8 stocks or just one, don't overlook opportunities like these. If you found this video helpful, give it a thumbs up and subscribe for more informative content like this in the future.